Finally, some great news into the economy. The Bank of Canada officially has reduced the interest rates by 25 basis points. Now, this is coming from 5% up until to 4.75%. So this is great news, particularly for homeowners, those homeowners who have variable mortgages, or if you have a HELOC. If you have a fixed rate, it's not so much going to affect you at the moment, but it's good for you to watch videos like this. It's good for you to get information like this, because down the line, when it comes time for renewals, let's say in 2025, you have a renewal coming up. I'm going to be talking about all these things and how the trail of this looks like. First of all, so for the past 4 months in a row, there has been a sustained rate of the inflation dropping. So the Bank of Canada was watching this and gave them the confidence to now drop it by 25 basis points. They're not going drastic like they did in 2021, and we saw what really happened there. The inflation went up until 8%, and that completely affected a lot of things. So this time around, there's a very good study with this. And when you're watching all the information, we're watching all the news, there's a sense of confidence when how they're approaching this, which is a great thing. It gives us confidence into the market, gives consumers confidence as well. Currently, the inflation rate is sitting at 2.69%. And just to give you a good understanding, last month it was at 2.9%. And last year, the inflation rate was at 4.41%. So we can see a good pattern of the inflation rate dropping. And this is what's influencing the Bank of Canada to make some positive changes, because just so you know, and I'm going to show it to you here, the last time the drop happened was in 2020. And we've been sitting at a 5% rate for almost the last 11 months. I'm just going to show you that chart down later on in this video, and it's going to be really good insight for you to see. So given the new interest rate of 4.75% today, we're still in that restrictive territory. They don't need as much restraint today as opposed to what was happening in the inflation rate when it was at 8% in 2021. And that's why they've dropped it by 25 basis points. But there's still that caution of watching what's going to happen as the new announcements come up towards the rest of the year. Possibly there might be a pause. So I think it's a good thing that they're doing it this way, particularly at this time, which we're going to get into as well, because there'll be enough time to study what's going on. There'll be enough time, there'll be enough data to gather as they're looking at what's going on with the inflation rate as well. So I want to get us all on the same page on this video by giving you a little bit more data or a little bit more information, because I know there's some homeowners watching this for the first time. You don't understand what the frenzy really is, particularly some future homeowners who are looking at this. 25 basis points, really, what does that do? I want to show you this chart, and it will actually give you a really good understanding of how to approach this market as well. Given if you're looking to take action, whether it's buying, selling the next 9 days to 90 days to 6 months up until a year's time, this is going to give you a really good and honest flow pattern of the questioning that you should have. As you can see everything that's happening, I really want to give you guys the ability to look at this at home by yourself and just question your decisions, question some of the plans that you might have, and let it spark some good conversation in and amongst yourself. And I'm here to help as much as possible. I have a lot of information with the market, so I'm always happy to have conversations with people, as my clients know this as well. So I'll call this the transfer pathway of monetary policy. So at the head of this is the central bank. So the central bank pretty much makes a decision, and once they make a change, let's say in the interest rate, whether it's going up or down, as of now it is going down by 25 basis points, immediately there's some 4 channels that are affected by this, and this is the market rate, the house prices, the expectations and confidence in the market, and the exchange rate. These 4 factors determine the domestic demand and also the external demand. Let's say the foreigners who are coming into the country, and we've seen some of the policies that have been implemented because of immigration. This is what happens when the central bank does something like this. And when you look at the exchange rate in and amongst Canada, US, and other countries, when they see the Bank of Canada has made some drastic change on their rates, this dictates on whether they want to keep on trading with the country, which will fluctuate the Canadian dollar up and down, whether they'll choose to bring the investments into the country or choose to take the investment out of the country. In real estate terms, This is why you saw in the pre-construction market, we got a huge hit with this because the exchange rate was slightly not supporting, let's say, when material was being brought in from different countries into Canada with the inflation rate being at 8%. The pre-construction market really got hit because the development fees were becoming a little bit too expensive. The materials were a lot more expensive at that time. So that completely compounded into what we're just experiencing today in the pre-construction market. Now that the Bank of Canada has dropped the interest rate, it's going to be cheaper for the commercial banks to now borrow money, which in turn is going to benefit homeowners, consumers like you and myself. You'll see that house prices will now start shooting up slightly because the cost of borrowing is much cheaper. So the demand for mortgages is going to be higher. The demand of buyers coming into the market is going to be higher. And we know what's going on with the Greater Toronto area market. We are at a lack of supply. But this might change a little bit because more people might bring the property up in the market because they feel like they can find other things. So this might change. It's going to be very interesting on how this goes on moving forward. So if you are a buyer, when you look at this, I would say if you're coming into the market in the next 9 to 90 days, you're probably going to be benefiting the most out of everyone compared to anyone who's going to be coming in down the line because the prices are going to be slightly higher at that time. Then when you look at the expectation and confidence, so the consumer confidence typically becomes a lot higher because now the people are willing to spend their money because it's now cheaper to spend. The area that really gets hit the most is really real estate, because you see the drastic change immediately. As opposed to when you go to the grocery, the inflation has already affected it. It's gone up. It takes around 18 months for it to really clock in. Now, for real estate, literally you'll see it within a week or we'll see it within a month where there'll be more people coming in. You just get more mortgage applications. You get more buyers going out for showings, for viewings. That's what we're already encountering because the rates have just dropped slightly. Now, the domestic demand, this is where we're going to see a lot of traction coming into the summer. We're already in one and coming into the new announcements that are going to be coming up as well. This is why the Bank of Canada is watching the inflation rate to make sure there's not such a drastic change in this. And this is a very thin line right now because as you can see, if this rate keeps going down significantly, that inflation, there's going to be more people in the market who want to now come in and borrow money to purchase properties and all this. And also there's going to be more money into the economy and the inflation rate will start going up again. Now that we're all on the same page, let's talk about some of the common questions that could come up. And the most common one would be, and something that I know a lot of people are thinking is, what prompted the Bank of Canada to drop the interest rates today? Why would they choose to increase the rates right now as opposed to in July or down the line? But there's definitely more to it than just that, which we're not privy to. So that's another question that I think is good to have in and around there. Then the other thing that I also thought of is, what else will they need to see for this to drop to that 2.3 to 3%, what we call the neutral rate, where everything is going to be kind of normal per se. But the rate at which they do this is also going to be very important. There's no need, and we're not in a recession where they have to make any drastic change in announcing interest rates. So that change will have to happen in a very significantly slow way. I think they're probably going to pause the increase or the decrease of the interest rates and just to see what's going to happen, let it settle a little bit, and let's see what's going to happen with the inflation rate. So all of those things have to happen, but we have to question in a sense of what they have to see before we get into that neutral rate. And the real estate market is really going to be taking advantage of that point because I can already see some of the problems that we're going to encounter in the market because we have a huge lack of supply. I don't see how this can be controlled. So just by that alone, anybody that wants to come into the market will have a hard time because you're not the only one who's going to want to purchase a home. It's going to be 5 more, 8 more people who want to purchase a home. So for you sellers, if you have a really good house or a good home, you're going to be sitting in a really good place, but you're also going to be in a place where you have to find something else after you've sold. But that's a discussion for a different time. And the other thing here, the Bank of Canada now has officially pivoted. So if you look at this chart, January 25th, 2023, the interest rates were at 4.5%. And this was an increase from 2022 by 25 basis points. So if we go all the way up until, again, it stayed the same at 4.5 for the next March, April, up until June 7th of 2023, and the interest rates again were at 4.75%, and it went up by 0.25 again. Same thing in July 12th. So we've sat at this 5% interest rate from September 6th up until this month, June 5th, 2024. So they're not just going to do this one cut in isolation and that's it. So there's going to be a series of cuts coming up in the next few months here. And remember, as I said, we're not in a recession where they have to make a drastic announcement in terms of cutting the interest rates. So right now they're just going to do it gradually. And if you look at this statement here, in 2000, the bank introduced a schedule of 8 fixed dates per year for announcing the policy interest rate. In special circumstances, we may announce rate changes at other times, for example, on March 13th, 2020 and March 27th, 2020, in response to economic shocks from the COVID-19 pandemic. So in 2024, we've already had 3 announcements that have already happened in January 2024, March 6th, April 10th, and the latest one, which is June 5th. So the next interest rate announcement that we should be expecting would be in July 24th, September 4th, October 23rd, and December 11th. Obviously, the Bank of Canada is going to be watching the inflation rate to make sure that this is looked after, to make sure we're getting the right cuts on that. The goal for the inflation is to get it under 2%. How long do we think this is going to take? Because we all don't like the inflation rate being up there, because it dips into your monthly income. You can get a raise, but you go do your shopping and you're left with almost nothing after you've done your shopping for the household, for your kids and all those things, because the inflation rate has just shoot up drastically. So the goal is to get it under 2%. How long that's going to take, we all don't know, but we could see that we are in a good track of 2.69%. And I just wanted to throw in a disclaimer in everything that I'm just saying here, because we have something big coming up towards the end of the year. And this is the elections that are about to happen in the United States. As it stands, from the data that I have, our policy rates are lower than that of the United States. It's lower by 70 basis points, which is a huge positive thing that the Bank of Canada is doing here, and they want to keep doing this without pressuring the Canadian dollar. And this is going to be very beneficial for us who are in the real estate business and who are looking to purchase some new homes, or who are looking to do refinancing, because it's going to put us in a much better position coming into the 2025 2026 time range. So what are some of the things that you should really kind of take away from this? First is the main question that we always get in the business: do you think we're going to be in a recession? We're not facing any recession, because the inflation rate is dropping at a good pace. They're not changing anything rapidly. If they do it rapidly, that's when I believe we're going to face a recession. And I believe we were in one come in 2021, because that rate was at 8%. There's going to be a multi-year cut in the rates. They're not going to do anything drastically again. So we should expect another cut coming into maybe in July or down the line. And also should expect there to be a pause, because they have to also look at what's going on, and also to make sure they're up to date with the elections out there in the States, because there should be a pause somewhere in there just to manage that, because the Canadian economy is very dependent on the US as well. So then lastly, the inflation rate is back at a normal rate, which is a positive thing. So it still has to keep going down up until that 2% point, so that the monetary policy rate is also going to keep going down. The initial rate is around 2.5 to 3%. So how long we're going to take to get there, we'll stick and find out. I think maybe the next 2 to 3 years, we're going to be in a really good position at that time. So I hope this video has given you some good insights. I'm going to really dive deep into more detail about the purchasing and the selling side and how this affects everybody. Then from there, you'll have a more true information on how to proceed as well. If you have any questions, you want to reach out to me, please I have my link in the bio here. Set up a time where we can schedule and have a quick conversation, or you can just shoot me a text, because I know some of my clients prefer doing that. Shoot me a text and we can schedule something as well and take it from there. Up until next time, have a good one. Thank you guys.